Hi, everyone. Thank you for joining. I'm going to give it a few more minutes to let a couple other people join. So in the meantime, just go ahead and take a seat, and we'll get started here shortly. All right, let's go ahead and get this started. I know we're recording it as well, so if people join late, they'll get a copy of it. But I know it's Veterans Day, and people want to take off here. So let's get it going. So first things first, my name is Jeff Lamott. I am president of Val-Chris Investments. My partner Chris has done a couple of these, and he is out. He's out actually at the American Association of Private Lenders conference today. So I'm stepping in his place to kind of go over the deals that we're going to refer to for this month. The topic for this month is unique loans that Val-Chris Investments has worked on. So the goal here is to really show you that we're what you would consider an out-of-the-box lender. We're not your typical conventional DSCR or even some private money lenders where they have very specific guidelines, and unless you meet those criteria, it's something that they can't do. What we do is we pride ourselves on being able to look at a transaction and say, how can we make this work? Where, what gray area is the deal living in where we can say, okay, this makes sense if we structure it, this way. So that's one of the things I think we thrive at. And so that's kind of the point of today's webinar, is to go through a couple of those deals. We can discuss the different nuances with each transaction. And then at the end of it, if you guys have any questions, feel free to use the Q&A box, and then I will do my best to go through those and answer them as much as possible. I know a couple of you are brokers of Chris's, some are probably a broker of mine. You can ask any of your questions to Chris or myself. Just go ahead and drop me an email after the fact, or drop Chris an email, and we can go ahead and take care of you from there. Let's see here. So Val-Chris Investments, we were founded in 1975. Chris has been here since the early 80s. I've been here since 2009. We've always funded what you would consider hard money loans. We don't really stray from that. We figure if you're good at it, stick with it. If it's not broke, don't fix it, right? What makes us different is we fund our loans with our own money. So while many hard money lenders will require their beneficiary to wire to title, we don't. We fund our own loans, and then we collect the funds from our investors after the fact. What that does is it allows your transaction to close quicker, close smoother, and you're not waiting on multiple bennies to send a wired title so the loan can record and your client can get their money. So doing so allows us to perform faster and makes our process a bit more reliable as well. As far as the underwriting process goes, the underwriting is done in-house by myself or Chris. And what that does is it offers you a faster turnaround time. So, well, most loans, I would say, get priced within about 2 hours of shooting us an email, give or take, depending on the day. But for the most part, you're going to get an email back from us same day with an answer as far as what we can do, what the pricing will look like, and if we have any questions or on different ways to make it work, so we can have that discussion. To build on that, there's one underwriter for pricing, depending on who you're talking to, whether it's myself or Chris. Typically, you're going to hear from one person, and you're not going to hear from a committee, or you're not going to hear from a group of people who are very not involved in the transaction. We do this all day. We see every loan When we're pricing it, we price it to sell, and so we typically do that with each deal that we're reviewing. Let's see here. So one of the things that keeps hard money or private money different from other transactions is we are what you would consider a business purpose lender. Business purpose is a unique term because most people will think of SBA loans or other types of lending where you're lending based on the business of a property. This is not that. So all of our loans are secured by real estate. So they're secured by the building itself, not the business of a property. Um, but all the funds must be used for business reasons. Typically, that means that the funds are going into a business account, or the borrower is getting cash out to buy a rental property, or getting cash out to inject capital into their business, things like that. We do those with first or second trust deeds and third trust deeds, as you'll see actually. So we can do first, seconds, or thirds. Another interesting point about us is we'll do owner occupied loans. Many hard money lenders won't do owner occupied deals. So for us, as long as the funds are being used for business reasons, we have no problem with the borrower lives in the property. Let's see here. So owner occupied purchase transactions. So this is another unique one. Really, the way you can do these and consider them a business purpose loan is if the borrower is buying the property under an already formed corporation or LLC that is active and earning money. So it can't be a shell corp. It can't be an entity that they just spun up just for the transaction itself. But if you have an entity, or sorry, if your client has an entity and they're buying a property and they're buying it under that entity, and even if they're going to live in the property personally, assuming that entity is already formed well before coming to us, and it's an active entity that is earning income and has a purpose, then they can buy that property under their entity name and they can actually live in it as their primary residence. Uh, Stated income, stated asset loans. We don't require W-2s, bank statements, or tax returns. We are hard money, an actual hard money lender. We're not the DSCR guys you see out there claiming to be hard money, and then you talk to them and then come to find out they're asking all sorts of stuff they shouldn't be asking. So we are an equity-based lender. Our main concern is what the value of the property is. That is our collateral. That is our asset. That is what we're lending based on. Because of that, we're not requiring bank statements, W-2s, or tax returns. Again, stated income, stated assets. We still like to see that information completed on the loan application, but I'm not calling you up and saying I need proof of all of those things. No FICO or low FICO borrowers. This is unique, I think, to lending. But yeah, I mean, we've done loans for borrowers that have no FICO, borrowers with FICO in the 400s. Again, being an equity-based lender, our concern is the equity in the property, since that is our collateral, that is our asset. So for us, we're more concerned with that than we are the borrower's FICO. I will tell you that doesn't mean all of our borrowers have bad FICO. For any of you guys have sent loans to us, we've seen everything from 460, 470 FICO all the way up to 810, 820 FICO. So we do loans for all different types of borrowers, including foreign nationals who don't even have credit or don't have a FICO score. And yeah, short sale REO transactions to save the property. We're kind of that save the day lender. If you have an escrow fallout, or if you need a quick turnaround time, or you need something to close quickly, call us. Let us know what the situation is. We can rush a deal through if it makes sense, and we can get your deal done so that way you don't lose on the transaction. We lend in other states. So right now we're in 9 states total. I would say about 80% of our loans are currently in California. California is where we're based. That's where we started and where we still are. So majority of our loans are there. As many of you know, California is also probably one of the heaviest states in compliance. So it makes it easier for us to lend in other states since we are operating in probably already what would be considered one of the hardest states to operate in. We operate here. We lend on all property types. We have a California DRE license. We also operate under our DFPI or CFL license. We do owner and non-owner occupied loans here. We do second trust deeds, third trust deeds, first trust deeds. We've done fourths even. And typically we'll go up to about 65% in most purchase transactions, usually 60% in refinances and 60% in junior lien refinances as well, usually in second, if it's a pretty unique, nice situation. Loan values are always case by case basis. So 65% is usually the max we'll go on a purchase. And then it kind of scales down from there. I won't go through each state and bore you guys with each thing, but you can see here we also lend in Arizona, Colorado, Florida, Hawaii, Oklahoma, Nevada, Texas, and Washington. Depending on the state, you may or may not need a license there. California, you do need a license. Arizona and Nevada, you need a mortgage broker's license in one of those states in order for us to do a loan for you. Those states are unique since we operate under what's called a wholesale license in Arizona and Nevada. So we're not allowed to talk to the client directly. Everything is done through you as the broker, which is why you as the broker must be with a mortgage brokerage in one of those states in order for us to be able to do the deal. But you can see here from the grid itself, we lend in all these different states. And if you have a deal in one of these, feel free to give us a call and we'll take a look at them for you. Products offered, first, second, third position loans. Like I said, we've even done fourths depending on the deal. Cross collateral loans. Crossing other properties is a good way to get extra equity if for whatever reason the borrower is tight on it. So if they need cash out on a property and they just can't make the numbers work, we'll cross something else that they own. Or say they're buying a property and they're equity heavy on their properties, but they don't have much cash. We can cross another property and actually use that equity as their down payment. That way they're not having to come in with cash. So they can buy a property, and rather than putting that cash into escrow, we cross something else that has the equity for it. That can be their down payment. And that loan will cross both properties as our collateral. We do what's called true bridge loans. So bridge loan is a term often used to describe short-term loans. That's not correct when it comes to the true definition of what a bridge loan is. A true bridge loan is actually a primary residence purchase where you're going escrow to escrow. So you are buying where your client is actually selling their primary home to buy a new primary. We might cross both properties there. It's an 11-month term, and it's a true consumer loan. It's the only consumer loan that we can do. But that is an option, the true bridge loans. We do loans to foreign nationals, borrowers who are buying investment properties over here, borrowers who are already over here and own properties. Like I said, they don't even have a social. Our main concern is the collateral and the asset itself. We do probate loans if you have a situation where you require one, purchase loans, refinance rate and terms, refinance cash outs. We do mobile and manufactured homes, assuming they are fixed to the foundation and considered real property. And then we also done loans with bankruptcy issues. So it just depends on the situation. And then as far as all property types, we hit everything in California. We've lent on everything from schools to land to industrial to houses, multi-unit, all sorts of different things, gas stations. So nothing is too unique. We can look at everything. And our promise to you is not that we can do every loan, but that we can give you a quick answer on whether or not we can do it. And that's what we can offer you. How do you get paid? So all of our fees are on the closing statement. So essentially what's going to happen is when you price a deal with us, you're going to say, hey, Jeff, or hey, Chris, I have this loan. I want to know what you'll price it at. We'll tell you what the rate's going to be. Assuming your client says, yes, let's move forward. You notify us of your fees. So you say you're charging 2 points, 3 points, whatever it is. And then your fees and our fees will be listed on the closing statement. So that way there's no guessing who's getting paid what. And when the loan closes, you are going to go ahead and get a check from the title company at the close of escrow. So you're not guessing what you're going to make. You know ahead of time, and when the borrower is signing the docs, the fee is on there, so it's set in stone. Typical time to close the loan is roughly 10 business days. That's on average. We've closed loans sooner. We've closed loans in literally one day, or I should say 24 hours. Sign one day and then fund the next day. But I usually tell everyone 10 business days is probably your average. It can get longer if there's title issues, if you have appraisal issues, things like that. But assuming a clean file, 10 business days is pretty common. As the broker, you are the liaison between us and the client. So that way you have the relationship. You're the one in discussions with them. You're passing along conditions we need. You're the one collecting the loan app, the conditions from the client. That way you keep that relationship. And hopefully the goal is that you get that next loan after they're ready to pay us off. So that way they get us for a short-term situation. And then when the time comes, you're ready then to get them into a longer-term product. So now you're getting a commission on our loan, and then you're also getting a commission on that new loan once they're ready to go. We protect our brokers. So like I said, it's important for you to keep that relationship. If you price a deal with us and then that client comes back to us separately, we're going to decline it and say you need to go talk to your broker. We've already had this deal in-house. Our relationship is with you, the broker at that point, and we want to make sure that we protect that relationship. Just a side note, about 85% of our loans come from brokers directly, not the consumer directly. We prefer to work with brokers. That's why we take it so seriously. So when you send us a deal for pricing and we price that loan, we're going to protect that relationship and we're going to make sure that you as the broker own that deal once it's been priced with us. Honest and competitive pricing. If you can get better pricing elsewhere, I'll tell you to take it. Go for it and do it. Right? We're all doing the best we can, trying to get the best rate we can, trying to be the best we can for our clients. Like I said, we can't do everything. We're not always going to be the best, or sorry, we're not always going to be the cheapest. We'll be the best. But if we can't do it, we're going to tell you quickly, and that way you're not being strung along, and you have an answer quick for your client. And lastly, years of experience. We're one of the oldest lenders in California. Like I said, we've been in business since 1975. All we've ever done is hard money, and we don't plan on changing it. So we've been around for a while, and a majority of our loans come from referrals at this point. All right, so this is kind of where the unique deals start here. So I have three transactions, all of which are, I'm going to say unique just because they're out of the typical wheelhouse of a regular private money lender. Um, I touched earlier on the fact that we do junior liens. A lot of people will do first and second trust deeds in California. Not many people will do junior liens out of state. We will, depending on the state, of course. That grid that you saw earlier is really what you need to look at. But many of our out of state lending, those states do allow junior liens depending on what the state is. This state, for instance, is Nevada. And like I said, in Nevada, you as a broker would need to have a mortgage broker's license in Nevada in order to send us this deal. You'd be talking with the client directly. You'd be submitting the transaction to us. But in this situation, we did a third trust deed. We got them some equity with an out-of-state junior lien. I think one of the unique parts of this is the fact that we're in a third position. Um, First seconds you see, especially in California, first seconds out of state, a little more rare. I think third trust deeds out of state are probably very rare. I don't know of any other hard money lenders, at least in my space, that are offering these. And for the right deal, I think it makes sense for your client. People will often ask me, why are you doing, why not just do new first? There could be a million different reasons here, but typically if they have a bank first and a bank second, they don't want to touch those loans. The rates are low. They've locked in those deals that they don't want to pay those things off. If they need the cash, they'd much rather get a junior lien, whether in second or third, keep those firsts and seconds in place with the lower rates, and that way their blended monthly is much lower than doing a whole new loan. It could also be a situation where the first and second are consumer loans, and if we paid them off, that would make our loan a consumer. This allows it to leave those in place, give them the cash they need for whatever reason for their business, and then they can go ahead and operate from there. Um, let's see here. This one, they were using the funds towards their financial management business. So in this case, what would have happened was they came to us, they got cash out, we left the first and second in place. We got confirmation the first and second were bank or conventional loans. We would get a copy of the mortgage statement, get a copy of the notes to make sure the terms aren't too egregious. And then at that point, we'd say, okay, we'll go in third position, usually up to 50% or so in third position, and we'll give them the capital they need for their business. We usually want that money to go into their business account. There's a couple of unique situations where that wouldn't happen, but for the most part, we would like those funds to go into the business account directly. So that's what happened on this one. When it comes to third trust deeds and second trust deeds, frankly, when it comes to out-of-state deals, we're looking at states like Nevada, California, Arizona, Hawaii, and Colorado. Like it says, a service not commonly entertained from other lenders. It allows your clients to touch the equity of their property without refinancing their low rate with their low rate first and seconds. And obviously, it closes a lot quicker than going to a bank and redoing these loans completely from the get-go. So, in short, these seconds and thirds out of state can be a nice, quick way to get your client the cash they need without touching their low rate senior loans. And that way you can get them the deal. And then when the time comes, maybe you can refinance them again later on, getting a whole new transaction out of the situation. Mm. Seems like the hot topic of the month, land. Land deals. I probably get, oh geez, 3 to 5 deals a day pricing land. We do them. We do them a lot. We don't do them all, as most lenders don't. Land is a unique situation. You really want to see land that isn't land surrounded by more land. In this case, though, this is a property down in Marietta. What we liked about it was already income producing. The borrower has, I believe it was avocados that were being harvested on this property. and it was roughly 10 acres. There we go. Paved access, water, and power. And the borrower was using the funds to expand the subject with more avocado trees, irrigation, and equipment. So what this tells us basically is the borrower has frontage. You can see from the road in the picture. So it's not, off in the middle of nowhere. The borrower has a business already in place. They already have a game plan of what they're going to be using the money for. They're going to be expanding their operation with avocados, trees, things like that, infrastructure, more irrigation. What that tells us as a lender is the borrower has a plan. It's not a piece of land the borrower picked up, many years ago and has just slowly appreciated, and now they want to, pull as much cash out of it as they can. What it tells us is the borrower knows what they're doing, and that makes us feel better when we're pricing and underwriting these deals. So in this one, you can see it was a first trust deed. Loan amount was $130,000. Land was just under 10 acres. It's located in Marietta, California. Um, there is a special type of lending that many institutions will try and avoid. We offer this type of financing for, acquisition, for developments. This person already had a business in place. So for this, it was, like I said, to expand operations. And it allowed them to grow their agricultural operations, showcasing our commitment to supporting a wide range of different real estate ventures. So I would venture to say this one, and actually this one was at 40% loan to value, and the borrower's FICO was only 581. So 40% loan to value on land is probably higher than what you'll see most lenders going. And then also the fact the borrower had 581 FICO, and we were still able to get it done. I think is pretty impressive. So all that to say, this is a good unique situation that thankfully we were able to get done for our clients. All righty. Lastly is fund control. Fund control is another one of my enjoyable things in life, but we don't do many fund control deals, but we do them. And this one was unique because it was large, $1.3 million fund control loan. You can see here it was an investment property, 5 bedroom, 5 bath SFR located in Orinda, California. This one happened to be a first trust deed. And what we ended up doing for this one, and what we do for a majority of them these days, is we use a third party company, typically La Mesa Fund Control. And what they do is they assist in the fund control process. They handle the inspections. They handle many of the releases after the fact. And so, really, this way, it's good for you as a broker and for your borrower as a client because the fund control process is already set. When the loan closes, the borrower knows what stages the funds are going to be released in. They know what work needs to be completed, and then each step of the way, when the property inspection occurs, it's not a situation where we're just making a judgment call based on what they tell us. There's actual inspection from a contractor from La Mesa Fund Control that is going to go and they're going to actually review the work that was done and verify it was done in a workman's-like manner. This provides stability to your client because they know that as they complete the work, they're going to have a quick turnaround as far as releasing money so they can start their next stage, get the contractors paid. And it's a good product to have for your clients. That way they can do value adds, they can do all sorts of different things. But this one showcases our commitment to ensuring project success through fund control services. By partnering with La Mesa, we provide an added layer of security for both the borrower and our investors. Guarantees the loan proceeds are used as intended for the property's renovation and completion, which mitigates risks and ensures the project stays on track. Powerful tools for you as a broker and with clients undertaking renovation or construction projects. So I hope that kind of gives everyone an idea of the more unique or different type of situations that we do these days. I think with hard money, the main thing to think about is that there is no rate sheet. There is no grid of loans that we can or can't do. If you have a transaction, it doesn't fit in your typical criteria, and you think it might fit for private money, the main thing is just to give us a call or email us. Worst thing we're going to say is, sorry, we can't help you. If we can do it, or if we're unsure if we can do it, we might ask you a couple more questions. Do they have other properties they can cross? What the situation is. It's really about that discussion and understanding, okay, here's what makes sense for your client. Here's how we can add value to the transaction. Here's how we can make it work for you. We've been doing this for a long time, as you've seen, and I think we've honed our process pretty well over the years. We can always improve, and we're always trying to improve. And I think that if you give us a chance, you'll like what you see for the most part. So, with all that being said, I don't see any Q&A here. So if you guys have any questions, please put it in the Q&A box. I'd be more than happy to answer them. If not, my information, my partner Chris's information is at the bottom of the slide here. Please feel free to email us. Please feel free to call us. I'm more than happy to talk your ear off and go through whatever the transaction is. And with that being said, I'm done on my end. So I want to thank you all for coming, and hopefully I'll see you all soon.